All right, guys. So welcome again to our weekly trading forecast for the week of 30th of March to which day? 3rd April. So it is very fast. We are now entering April of 2020. So this is what the first quarter has completed. So time flies. 2020 is already a quarter finished. Okay, so today let's talk about the market. So this week itself, I think the market is mostly in a pullback zone, right? In the pullback mode. Previously, we can see dollar is appreciating a lot. You can see gold came down a lot as well. Of course, the US stock market, Dow Jones, I think the whole depreciation was like 33% or more, or 35%. I cannot remember the exact figure. But this week itself, we see a lot of rebound. The Dow Jones, I think, has recovered more than 20%. Many stocks actually recover more than 20%. The gold price has also shot up more than 70%. Yeah, so we'll talk about it later on. So as usual, I will still want to start off with the dollar index. Okay, so I will just share my screen right now. All right, man. So this is the dollar index. I will just remove everything first. Let's go to the day one chart. So you can see the dollar index highest it ever reached was somewhere at 103. It should be slightly higher. Okay, then it came all the way down. Right now, it actually went into a very important demand zone right here. Okay, this is an inside bar formation. So which means to say during this period there's a lot of buyer and seller. But when the price broke above the inside bar formation, it means to say that the buyer is stronger than the seller. So which is why when the price comes back to this area, right, there might be a lot of buying position that's still hidden in this area. Due to the inside bar formation. So this week we have to be careful. If you see that dollar came down so much, you thought that it's going to be very bearish all the way, then you have to consider you're going to wait for the breakout. If not, right, for myself, I think the dollar won't just break all the way down. I think you will still find some support. You will still rebound or retrace to a certain level. So dollar-wise, if you look at the 4-hourly charts, you can see previously there was a rising channel. Okay, the price broke off the channel, went back in, got supported at the bottom, then it break below. So this is why the price extended its bearish trend all the way now into this demand zone. So in this week, I think for the dollar, okay, most likely it might range a bit. It might go down a bit. Right, it might go down a bit, or it might go up a bit. Okay. Anyway, you're just going to trade within this area. Then we'll see what kind of formation is being formed right here. Hopefully, for myself, okay, I just hope to see there's some break of a trend line. Let's say if we go into the 1-hourly charts. Okay. If let's say the price start to break out of this, I'll wait for pullback. Then I'll find opportunity to buy the dollar or to sell the dollar pairs such as euro dollar or pound dollar as well. Yeah. So that's pretty much for the dollar lah. Yeah, lo.
A lot of dollar data this week also.
This week you mean the last week or this coming week?
This coming week.
This coming week.
NFP, right? Yeah, NFP on Friday.
No, NFP. Yeah, there's NFP. This one I think will be quite important. Like for example, last week, the unemployment claims usually is still important, but not so important. But why is it that the last unemployment claims is very important? Is that there's an expectation that the unemployment claims will shoot up, rise very fast. And if it does, then dollar will continue to fall. If it doesn't, then dollar might find some support. So if we look at the unemployment claims, right, I think actually it's 3,283,000. So way more than the forecast and of course way more than the previous one before the COVID hit the market hard. So yes, this week I think NFP will be very important. Yeah, the forecast is negative 81. This only happens. It happened once 2 years ago, like 2 to 3 years ago in 2017. And of course, it happened a few times during during the last financial crisis. So this is definitely a recession. So you can see when it goes into recession, right? This is what will happen. Our employment change will be forecast as negative. And right now, this coming one is the very first one that will have a negative employment change. So in this situation, right, we can say that actually the recession only started. It only started. So like some people, you might be thinking, well, maybe let's say the US stock market has hit the bottom. I think you have to think again. You have to think again. I don't think things will be so straightforward, so simple. Oh, yeah. So yes, of course, we got to be very careful with employment change. The NFP. Yeah. So that's for the dollar law. Anything on your side, JJ?
No, that's all that's all I'm focusing on. So
Okay.
I saw the next week is all US data.
Yeah. What else do we have? Yeah, mainly it's the US dollar. Pound, euro, or daylight saving time shift. So do watch out for that as well. Yeah. Okay. If not, I think I want to talk about the gold, because I believe that during this period of time, a lot of people will want to try to sell gold. And if it did so in the last week, I mean, yeah, last week, then you might be facing with some trouble, some losses. We can see that the gold price based on the day charts. Okay, so this is the technical sell. Okay, the reason why there's such a large volume of sellers is because the US stock market came down a lot. Businesses are losing money. Therefore, they need to liquidate gold for cash. So I believe a lot of people will hear quotes like, cash is king during this financial crisis. So that's a good reason why the gold price came down so much. As it hit the bottom, and finally there's some we saw many central banks, ECB, Federal Reserve, and a few others actually came in to give support. Like for example, the Federal Reserve, they also relaunched their QE. And I think it's something like unlimited QE. You're going to keep on printing enough money just to support the market, just to support the stock market as well. So, which is why that caused the gold price to shoot up and recover so much. But however, in my opinion, I do not think that the gold price will continue to go up because we are still far from over. In terms of the recession that we are facing right now, I think we are still far from over. So definitely there will still be another wave of a very strong bearish trend. There'll still be a lot of people selling gold for cash, for liquidity. And based on the technical chart right now, you can see that the very first wave that is started to rebound, okay, is somewhere right here. After which you retrace one wave and two waves somewhere right here, found support. And this is the second wave, showed up so much. After which, it went to retracement again. Okay, you can see this is like something like a descending triangle or symmetrical, whatever you call it. You can see it's a very hairy candles, a lot of shadows up and down. And finally, we saw the last wave. This could be the last wave, could be or may not be, but I think it is. Okay, so now we have already 3 waves already. Based on the error wave theory, if the price doesn't go up anymore from here, and which happened, which means to say that it's pretty much about time a reversal is going to come. And furthermore, the gold price has already retraced so much, has recovered this much. It's also a very good price for investors or businesses to sell their gold, their reserve, to liquidate for more cash since the price has already recovered so much back to 1,600 plus. Highest was about 1,007. The lowest it went down during this recession was 1,404. So this is already a very good price for them to sell right now. That's what I think. So which is why this week I will be focusing on selling the gold. If you try to sell gold this week, you'll face a lot of issue. But coming week itself, I think we'll have a good chance. So if you actually look at it, right, there's also a harmonic formation right here, which is the bet. Okay. So one thing I observe about the bet, right? If let's say it retraces all the way to 70.6%, which is what's happening right now, okay, it may not be over. It's near 70.6. You can see it's starting to range, but usually, okay, there might be one more wave of uptrend that shoot up, okay, causing most of the sellers right here, okay, to be stopped out before you will start to go down. Oh, familiar or not, JJ? I think last time you gonna a few times before. Okay, like it looks like it's resistor, it looks like it's going to go down, but for some reason, okay, it suddenly shoot up, and most people will get stop out because of this, or people are scared, people will just close their trade, but before they know, it started to go down all the way. Yeah, so this could be the scenario for gold if let's say it's going to complete the bad pattern. Anyway, for the bad pattern, we are supposed to look at up to 88.6% of the retracement level. So this will be the focus for me this week. So yeah, that's pretty much for gold. If let's say it goes down, then a few levels to take notes. Maybe you can look at the 4-day charts. Okay, number one definitely is the neckline right here. Okay, this area. So if let's say you're shorted, this will be the very first take profit level. But in fact, before that, we should also look at the bottom right here, the range bottom right here. Okay, if it breaks, okay, we'll look all the way to this level. But if not, if it continues to go down, I think at the most, somewhere at the previous low right here is very good for us to just exit the market already. Especially if you're a day trader, intraday trader. If you're not a long-term trader, there's no point to hold it. Okay, you can always look for another opportunity to sell. Unless you're a long-term trader, then you can look at it all the way to 1,345 and beyond. This is what I think will happen to gold price. The gold price, in my opinion, is not low enough to create enough appetite for investor to throw in a lot of money to invest in the gold in gold bars right now. It's too soon. So I think gold price will still come down one. Yeah. What do you think, JJ?
I share a similar view with you, and especially with the bad pattern, after the first few failed attempts, I've learned to set my stop loss above point X.
Yeah, but definitely your stop loss should be above point X. The only time you can don't step above point X, right, is that if it reaches 80.6, it came down, it break the bullish structure, the strong selling sentiment, and only then you got in. Yes, that will be the time you don't need to set your stop loss at X, or you can just set your stop loss just above the previous high. Yeah, but if not, let's say we are trying to set a sell limit, something like that, it's best to have the stop loss above point X. That's for sure. Yeah, that's a good point to bring up. All right, so that is for gold. What is your focus for this week, DJ?
I'm looking at euro dollar and dollar CAD.
Euro dollar and dollar CAD. Okay. You want to share a screen right now?
First, yeah, euro dollar for the past few weeks has been very, very correlated with the dollar.
Definitely.
I think similarly to this area here, right? I believe there will be like a pullback, which was here. It pulled back to this area, resisted before falling. So for my forecast also, I'm expecting price to, I think, retest this level first. And I think this will be a very important zone for this coming week. If prices were to get supported, right, then I think this could either be sell or buy opportunity, depending on whether price breaks or gets supported here.
Mm.
Yeah, similarly, like to this area where this was one, and then when the markets opened on Monday, it got resisted here for falling again. So I think if we can find a similar pattern here, there will be quite a good trading opportunity in this zone.
Okay, euro dollar, yeah.
Yeah, dollar CAD will be the next one.
Okay, can.
Dollar CAD, yeah, after it found resistance at this 4-year high, yeah, right at this point, it found resistance and then it started to fall and the entire week falling. And I think the first point of support should be at this area here, which was the previous high, this zone here. So if prices similar to euro dollar, if prices can get supported here, I think it will be a good buy opportunity because the Canadian dollar is still quite weak after oil prices fell so much. And also on Friday, they had another emergency rate cut. So yeah, these are my two focuses for this coming week.
What do you think of the oil price? Right? Have you looked at the oil, the US oil?
But also, yeah, I think the first point of support here, we also have to see if prices get supported there because oil is also, it hasn't fallen, it hasn't broken past this $21 range here. But yeah, on the monthly chart, it is really, really bearish. But we have to see whether this bearish trend can continue. Because I was looking at bear trends, right? And I think that there is still some, I think it's still able to fall, like seeing the previous bear trends and its volume.
Mm.
Comparing the
The
two
very
trends.
first one, the very first bearish one is during the financial crisis.
Mm.
So after like 12 years already, right now we are entering another financial crisis. I think as compared to the previous way to the previous one, I think there's still so much more for the price to go down. But of course, we also have to consider that oil price as of now as compared to last time is really really low. So it won't be as much as in the volume of the fall will not be as much as 2008, but definitely there's still more rooms for oil price to go down. In fact, I'm looking at 19. I'm looking at 18 to 19. So yeah, there's still room for price to drop. So for your dollar cap, which you're looking to buy again, I think it's a pretty good time. It's a really good time and a very good price to buy as well. Should the oil price start to fall again and the dollar start to recover and move into another bullish wave, then yes, dollar cap will be a very good trade to buy for this week or maybe the coming week itself.
Mm-hmm. Yeah, so with most pairs, these few weeks being so correlated to dollar, I think for euro dollar, yeah, the main focus should be on whether the dollar does it get supported at this area. And for dollar CAD, I guess you just have to watch the oil prices as well to see if oil prices does indeed continue falling after this more like consolidation pattern here.
Yep, that's right. That's right. Okay. So that would be your two main focus. Okay. Anything else you're looking at also?
Just these two for this week.
Okay. Too busy with projects.
Yeah.
Which is a good time. I want to quickly share about this. Like this week, right? If I was, I mean for last week I just ended my reservice, and the first 3 days I was in outfield, and I actually didn't really trade it. One thing is because of environment. Yes, I got my mobile phone, but when you're in outfield area, sometimes your connection doesn't work so well. So it's a risk to trader. Like if a connection is not good, you enter a trade and somehow things go wrong, you want to exit, you want to cut loss, you cannot do that. And but I don't know about some other people. I mean, during normal circumstances, yes, right now it's a financial crisis. Maybe on the Facebook, you see a lot of people is trying to promote a certain kind of mentality that this is a great opportunity. You should not miss out. You should participate in this market. You should be making money, so on and so forth. But what I want to say is that it doesn't matter if it is financial crisis or whatsoever, what kind of volatility it is in trading, right, or in any form of investment. We should be very very aware of FOMO, which means fear of missing out. If let's say you are investing and you're trying to make money from this time because you fear of missing out this opportunity, then you got to revisit again. You got to think again. You got to look at the risk that you are taking right now. Okay, I mean this is just for me to share to people who are feeling a bit unbalanced, because sometimes you might see a lot of people posting things like they earn a lot of money and stuff like that. Yeah, I do also, but I didn't post those kind of very crazy profits anyway. Well, I do see people do that, but is it really real or not? I don't know. Okay, I'm not anyone to say what is real or what is not. Okay, but anyway, the point I'm trying to bring across is whatever you want to do, make sure you really understand what you're trying to do. Make sure you really understand what you are investing in as well. Don't just because you feel of missing out this opportunity and you just go in. Like right now, I think a lot of people say, for example, the US stock market is so low already, it's a good time to buy. But is it really a good time to buy? If you buy and if you go against you, what's the risk? You got to think about it. So this is just something I want to share, and I hope people don't get burnt just because of the fear of missing out. All right, so let's carry on. I'm going to share my screen. Okay, so as you can see, this is the DJI Dow Jones, okay, the US stock market. Usually I look at US 30. I don't really look at Nasdaq or the S&P 500. The US 30 I think is quite enough for me to see as a whole for the US stock market. So we can see that it has came down a lot by how many percent? 38.7.6. Oh, so much more than what I thought. You see, there's the problem when you go off field. No lah, okay. So in a 4-day chart, of course, we can see that the price broke above the trend line, the falling trend line, and it started a very strong bullish trend. It's trying to recover the losses, and based on the price right here, all the way to this price, it has already appreciated by about 24 to 25%. Okay, that's a pretty good jump. But as compared to the previous downtrend, it's only about 30.2%, if I didn't remember wrongly. Yeah, exactly at 30.2%. And we are already seeing signs of selling already. Okay, very similar to the goal. Okay, you can see that this is the first wave of appreciation. Okay, very short one. Okay, but nevertheless, it is a bullish wave. Okay, because after that it came down, it never break low already, and this is the second wave, which shoot all the way up to this price. Okay, price came down again, and this is the final one, fifth wave. Okay, again, I'm not sure if it's going to go down from here, but at least we know that this area, this bullish trend is over. You can try to sell somewhere towards the bottom right here. Okay, important support right here. And if let's say it breaks below, then yes, you can continue to hold and wait for the next, very strong bearish wave that's going to go down and even break lower. Like what I've been sharing, I do expect the US stock market, the US 30 Dow Jones to reach somewhere about 15,000, 50% off, 50% diminishing from the stock market itself. That's what happened in 2008. And this time around, could it be even more? I don't know. But I think 50% is very possible, very achievable. Right now, it's just the beginning, and he has already shaved off 38% already. So what's new? Okay. But if let's say it came down again, it still is able to find support right here, and there's a break of the of the trend line itself, then yes, we might see the price going up again, maybe another couple of waves upwards. To which one, I don't know, but we'll look at it. Okay, definitely at a glance, we know that this price right here at the top is very important, just below the 61.8% level. So that's about 25,000. Okay, 25,000 mark. Okay, this will be a very crucial one if it really goes to this price. Okay, which I don't know whether you will reach. All I know is that right now, okay, there seems to be a chance for us to sell. Okay, if it doesn't break, then okay, I might exit. Okay, I might wait for the next opportunity. Intraday wise, I might even consider to buy. Okay, since the government is right now printing so much money to support the market, it might last for a couple of weeks. So that is my whole idea for the Dow Jones right now. Yeah. And anything else we should be focusing on? Actually, I haven't been looking at pound dollar for quite a while. It failed my expectation. I mean, before this financial crisis happened, I've been telling people that it will recover, Brexit is over, this and that, and well, who knows that we will gonna this COVID and price came down so much, and but it actually recovered so much already. That I didn't realize. I mean, I got to be honest, I haven't been looking at pound dollar. Well, but if that's the case, right, because this week's bullish candle is definitely stronger than the previous week, there's even a good chance that the pound dollar might continue to recover all the way to 1.45. Okay, I think this one we'll come and look at it again, like during our daily forecast and stuff like that. If there's an opportunity, we can do another video to talk about this. Anything you have you been looking at pound dollar, JJ?
No, I'm only focusing on dollar CAD and euro dollar.
Okay, I think for now, because JJ is still studying and has a lot of projects. Right now you're staying home to study, right? Staying home to do projects, right? Yeah. So he thought, hey, stay home, not much work, then who knows, the school still give him so many projects. So no choice. But I mean, whether be it his projects or if you are someone who is working and sometimes you get a lot of work, you cannot really focus on so many pairs, then just focus on one or two. That's totally fine. Or it doesn't matter. It doesn't mean that you focus on many pairs, then you will be able to have more opportunity. You'll be able to make more trades and make more money. It doesn't work this way. Sometimes most of the time, it actually work against you. So focus is.
I think over trading is the fastest way to lose money.
Yeah, exactly. I mean, been trading for so long. Yeah lah. Over trading is pointless in that sense lah. It takes out a lot of effort, takes out a lot of time and energy, but it doesn't reward you at all. It's actually quite a dumb thing to do, which I believe many of us as traders has experienced it before. We all know that that's a very dumb thing to do. So right now I don't. It's not that we don't want to spend time on the market or on the charts, but there has to be a point. We only look at a chart, trying to plan out our trades on a daily basis, and most of the time we'll probably just set alarm or come back and look at it during critical hours, like maybe 3 p.m. when the Euro session started, or 8 or 9 p.m. when the US session is going to start, or we just set alarm if we are sitting beside our desktop or laptop. We don't have to keep looking at it. There's no point to do so. So it's actually very simple theory lah. Very simple theory, very simple principle, and it makes your life so much easier. It makes trading so much easier as well, and more fun, not so stressful. Yeah. So anyway, this is all I want to share for this week. Anything else you want to share?
That's all for me too.
All right, man. So we have come to the end of our weekly trading forecast for this week. So just for you to know, we have a Telegram channel. So I wish there will be more people coming. I have more things to share, and we can discuss as well. Of course, we have our website, thelifestyletrader.com, where we always post our weekly trading forecast, and of course this video as well. So do take a look at it, and ask us any question if you have. And of course, like our Facebook if you like what we're doing right here. So that's all for this session. Thank you so much, and wish you all the best in the coming trading week. All right, see you guys.